whether it's auto insurance to protect us when we're on the road, or homeowners insurance to protect the biggest investment for most families, or life insurance to cement your family's financial security in the event of a tragedy. It's our job to make sure that the industry is protecting Americans' hard-earned money, not putting it at risk. American insurance companies are regulated by state insurance commissioners. We know that. The state-based system of insurance regulation is historic and ensures that local markets and needs are taken into consideration. The National Association of Insurance Commissioners, NAIC, coordinates state commissioners across all jurisdictions to identify and address risks to the entire system. In the Wall Street Reform Act, Congress created, a few years ago, a decade or so ago, Congress created the Federal Insurance Office within the Treasury Department to promote national coordination in the insurance sector. It's common sense. Insurers operate across all state jurisdictions and internationally. I'm pleased to have both the Maryland Commissioner, Kathleen Birain, on behalf of the NAIC, and Director Seitz of FIO testify today. Thanks for your public service on all levels. If we're going to keep Americans' hard-earned money safe, it's more important than ever that they work together. We'll explore many topics today. For example, 3 months ago, Lockheed Martin transferred $4.3 billion of its pensions to Athene Holding, an insurance holding company specializing in life insurance and owned by the private equity firm Apollo Global Management. Overnight, Lockheed Martin employees and retirees were notified that their pensions would be managed by Athene and no longer governed by ERISA or the Pension Benefit Guaranty Corporation. Many employees are very exceptionally nervous about that. It's one recent example of private equity giants' expansion into people's pensions and into the insurance industry. We know that workers end up worse off when Wall Street private equity firms get involved. We've seen it over and over in industry after industry. In March, I asked NAIC and FIO to look into private equity's expansion into similar pension risk transfer transactions. We need to understand the risks to workers whose financial service depends on pension and retirement programs. NAIC and FIO provided thoughtful responses to my letters. Thank you for that. NAIC has been monitoring the risk-taking behavior of private equity-owned insurers. FIO has done similar work and also looked at the wider interconnectedness of insurance and reinsurance markets across the world. Those connections have added to systemic risk concerns because U.S. insurance companies depend even more on the financial health of insurance companies outside the U.S. Taken together, our insurance authorities are focused on these emerging and complex risks to safeguard our economy. Our communities, our families rely on insurance companies to protect their loved ones, their homes, their small businesses, and so many parts of their lives. We can't ignore when risks build up or firms behave irresponsibly. We know who always pays the price when they do. It's rarely insurance executives. It's not Wall Street. It's not private equity executives. It's workers and families. It's taxpayers who were forced to bail out AIG a decade and a half ago. That should never happen again. It means looking around the corner to make sure industry and agencies are prepared for risks as they develop. As more Americans face increasingly severe climate catastrophes, wildfires, hurricanes every year, we need to help communities prepare, and we need to ensure that insurance watchdogs and the companies they oversee are also prepared. In the aftermath of some of these natural disasters, we've seen instances where insurers either raise prices or actually stop offering insurance altogether, leaving families, leaving businesses struggling to find affordable coverage as they work to rebuild their lives and rebuild their communities. We know this industry has a long history of racial discrimination, just like so many other big industries. Black and brown families face more difficulty across the board in getting insurance. We've seen this happen in auto insurance. Particularly earlier this year, the New York Times reported that customers, insurance agents, and employees sued State Farm for discrimination in the workplace and in paying out claims. My colleague, Chairwoman Waters in the House, has been working on learning more about this as well. Her committee recently requested information about large life and P&C insurers' involvement in financing chattel slavery. I'm glad FIO and NAIC are also working on this, and NAIC is investigating through its special committee on race and insurance. I look forward to reviewing FIO's upcoming report on availability and affordability of auto insurance. I hope it will shed more light on racial equity in assessing this insurance and accessing this insurance. Finally, later this year, the International Association of Insurance Supervisors will need to consider whether the U.S. insurance system's review of capital adequacy standards meets international criteria, because we regulate insurance differently in the United States, where state and local markets, international markets are served by the same companies. It's important that representatives of the U.S. system, like you, like FIO, like NAIC, advocate for fair treatment by international regulators. And now that the Fed Vice Chair for Supervision has been confirmed, Michael Barr and the offices testifying here today will get to work with international counterparts in this process. All these issues show how critical the work that you two do is to our economy's health and stability. I expect FIO and NAIC to prioritize monitoring these risks in their ongoing work.